Yeah. Uh, Today we are going to discuss about candlestick patterns. So, so these candlestick patterns will come under technical analysis. So first of all, we need to understand what's the use of this technical analysis. Okay, it's not that okay, I will learn these candlestick patterns or I will learn support resistance levels. I will learn moving averages. I will learn different kind of indicators, and I will succeed in stock market. Okay, of course it's possible, but it's not that it's not a guarantee, it's just a probability. So to understand this, okay, imagine like you have to walk to the office every day. I mean, you daily you have to walk to some college or office every day, and there is a wild dog on your usual route that always tries to attack you. So to avoid it, you explore alternative routes, analyzing each one carefully to ensure your safety. And finally, after confirming that I am safe, then you will proceed to that way. However, even with thorough analysis, there is no guarantee. You might still encounter a dog on the new route. This scenario approach to technical analysis in trading. Just as there is no certainty in avoiding the dog, there is no guarantee in the stock market. Candlestick patterns and indeed all forms of technical analysis are tools that help us assess probabilities but not certainties. Trading is about managing risk and making informed decisions based on probabilities, knowing that outcomes can still be unpredictable. So, in technical analysis, there are various charts of there are various charts available. Like here, you can see line charts, bar charts, area charts, candlestick charts, and Heiken-Ashi charts. So in this, each chart has different specific purpose and offers a different perspective on market data. Okay, like if I click on line, so I will get a line on this data. So similarly, if I click on area, okay, I will get the area. But here, the essence is like here we have different kind of options like Heiken-Ashi we have. So it's different kind. But all of this, but out of all this, these candlestick patterns are the most famous. So why these candlestick patterns are the most famous? I mean, these candlestick charts have gained popularity among traders and analysts all over the world. The reason candlestick charts stand out is that each individual candlestick conveys a unique story about market sentiment and price action. This story evolves depending on the time frame being analyzed, whether it's a minute or hour or day or longer. By interpreting these stories, traders yeah, yeah. By interpreting these stories, traders can gain insights into potential market trends and reversals. However, mastering candlestick patterns is not just about theoretical knowledge. It requires continuous practice and application. Engaging in paper trading can be excellent way to practice. The more you practice, the more proficient and confident you will become in using candlestick analysis. When discussing candlesticks in technical analysis, it's essential to understand the two primary components of a candlestick. That is the body. First one is the body, and the second one is the wick. So in candlesticks, we have two. One is bullish candlestick, and the other is bearish candlestick. What does this bullish candlestick indicate? It indicates that the price is increasing. This bearish candlestick indicates that this price is decreasing. So in every candlestick, we have two components. One is body, and the other one is wick, or we can also call it as shadow. So what is this body? The body of the candlestick represents the difference between opening and closing prices within a specific time frame. Okay, so in some charts, you will find this color as green, and in some charts, like particularly in forex market, you will find this color as white. So it can be in green color or it can also be in white color. So in this chart, the closing price is higher than the opening price, indicating bullish sentiment. Conversely, for a red, so here in stock market we will see like if it is bullish we will indicate it with green color, and if it is bearish we will indicate it with red color. But sometimes in some charts we will indicate bullishness with white color, and we will indicate bearishness with black color. So so it is small point to remember. So in a red candle, the closing price is lower. Yeah, so in a red candle, the closing price is lower than the opening price, signaling bearish sentiment. So here, the important point to note is in a red candle, the opening price is located at the top of the body, and the closing price is located at the bottom of the body. Whereas in bullish candlestick, the opening price is located at bottom of the body, and the closing price is located at top of the body. It's because it's just simple. It's because just like in bullish, the price is increasing, and in bearish, the price is decreasing. That's why it's a small, very important point to remember that in green candles, the opening will be at the bottom, whereas in the red candle, the opening will be at the top. So, and then we have the wick, and this wick can also be called as shadow. It represents the highest and lowest prices reached during the time frame. So these wicks provide insight into the price volatility within that period. What does it mean? Let's say, for example, this stock. I mean, let's think it is a daily time frame. Let's think this candle is a daily time frame. It indicates what happened in the stock on today. So let's say it opened at 100 rupees. It opened at 100 rupees, and after opening at 100 rupees, it had first it had went to 90 rupees. Let's say from 100 rupees, it had went to 90 rupees. And again from 90 rupees, it had raised, and it had reached 130 rupees. And it had reached the high of 130 rupees. But at the end of the day, it had closed at 120 rupees. So here, the wick represents the highest and lowest prices during that time frame. The same with the red candle, bearish candle too. Let's say the stock had opened at 100 rupees, and it had reached the high of 110 rupees. And after reaching the high of 110 rupees, it had fell till 70 rupees. After falling till 70 rupees, again it had closed at 80 rupees. So here, the body indicates the open and close of the candlestick, whereas the wick indicate highest and lowest points of the candlestick. See, the body and wicks together create a comprehensive picture of price action, which helps us to identify potential market trends and patterns. So in these candlesticks, to understand these candlesticks, we will divide these candlesticks into three types. So actually, I think you may have listened somewhere, or I think you may know about this, or you may have listened somewhere. There are n number of candlesticks, and there are different types of candlesticks, some tens of candlesticks, various names of candlesticks. So it's to be frank, it's difficult to remember the candlestick by its name, because while in the real market we can't think like, okay, so we can't think like what is the name of this candle, what is the name of this candle, what is the name of this candle. We can't think like that. So we have to take, I mean, the faster we are, we will be more, I mean, we will be more succeed. So we have to understand the psychology. Okay, for names, okay, for a short period of time, we have to keep the names aside. First, we have to understand the psychology of the candlestick. After understanding the psychology, then if we understand the names, it will be more better. So, to understand the psychology of the we will divide this candlestick into three types. First one is momentum related candlesticks, like based on momentum. First one is based on momentum. Second one is based on wick size. Third one is based on dojis. So this based on momentum. Okay, these candles will help in breakout time. It will help these types of candles. Whereas these big size candles, they will help during reversal time. And based on dojis, these are like neutral candles. This will be neither bullish nor bearish, which we will talk more later. And finally, combination of different candles. I mean, combination of different types of candlesticks. So here, before we start, we need to understand some key points. So first of all, for every candle, location matters. The significance of a candlestick or pattern is heavily influenced by its location on the chart. Yeah. So first of all, see here, so for example, here there are n number of candles out there, and I am taking this on a daily time frame. You can take it any time frame. In here you can see n number of candles. So here you can see n number of candles. Do every candle have the same importance? Do every candle is really important? So for this, the significance of a candlestick is heavily influenced by its location on the chart. And if a candlestick forms at the bottom of a downtrend, it often suggests a bullish reversal or upward momentum. Like, see, for example, here, yeah, okay. Here you can see at 16th June, 15th June, 16th June 2022. See here, there are n number of candles formed. So see, it is a small logic to remember. If any candle is forming at the bottom, a specific candle, which we will study more later, if any candle is forming at bottom, it indicates that a bullish signal is coming. It may go bullish. I mean, if any candle is forming at the bottom level, what does it mean? There are two scenarios. So one, see, for here one candle had been formed. Here one candle had been formed. Here there will be two scenarios. What will happen? It will break this support level, and it will go down further. Or the second scenario, what will happen? It will take this as support and it will raise again. So there are two scenarios. So here what we have to remember is, if a candlestick is forming at the bottom, it generally gives us a bullish signal. It generally gives us a bullish signal. And at the same time, if a bullish if a bearish candlestick is forming at the top, if a bearish candlestick is forming at the top, it often signals us a bearish signal. So it doesn't happen like that. So like, I mean, it doesn't happen like, see, here, here if, so when the trend is in upward, forming a green candle is not a big deal. So we all know, see, from here, the trend is going on upward. So here forming a green candle is a general thing. It's not a big deal. But if any red candle forms in middle, then what does it indicate? It indicates what the bullish signal may have ended, the bearish signal may come in. It indicates at the same time when decreasing, the red candlesticks coming is not a big deal. Okay, the red candlesticks will form, but if the green candlestick is appearing in between of these red candles, what does it indicate? It may indicate a bullish sentiment. Yeah, I hope you understood this. And and if a candlestick forms in the middle of the trend, and if a candlestick forms in the middle, okay, it is not forming in the top and it is not forming in the bottom, but if it forms in the middle, especially in a sideways market, it generally holds less significance and may not provide a clear signal. I mean, if any candlestick is forming in the middle, we will not give those candles much importance. We will give those candles very less importance unless if there are any support or resistance level is there. So, so first of all, yeah. So first of all, we will see based on momentum stocks. I mean, I had divided the candlestick into three types. First type is based on momentum, and let's study about that. So in this based on momentum, there are two stocks. One is bullish stock, and the second one is bearish stock. And we will call this stock as Marubozu candlesticks. And we will call this momentum related stocks. We will call the momentum related stocks as Marubozu candlesticks. So a green candlestick with a full body and no wick is often indicative of strong buying momentum. When such a candlestick appears at a resistance level or a potential reversal zone, it can signal a potential continuation of the upward movement. A buy entry can be considered in these scenarios with the stop loss placed below the low of the previous candle. So let's take an example. Like, see, like this is the support level. So this is one support level. As you can see here, the bearishness is there. And on 3rd October 2022, the Monobuzu candle had been formed. Monobuzu candle means based on momentum. Related candle had been formed. So it is to note that the psychology of momentum stock means, okay, sometimes you will see small wick on the upside. Normally, see in candlesticks, you can see like this, like without any wick. You can see the complete momentum, or you can see the small wick, either on both sides, or either on upward side, or either on downward side. You can see the small wick. It can be a no problem. So here you can see on 3rd October 2022, when there is trend of bearishness, what happens? On 3rd October 2022, a Morobuzu candle had been formed. A Morobuzu candle had been formed, as you can see here. And this candle had been formed. So what does it indicate? What does it indicate means, see, the sellers are in, the sellers are in control. The sellers had taken the complete control over the Dow Jones. Dow Jones from the last approximately from the last 1 month, approximately from the last 1.5 month, the sellers have completely taken over the chart. But after 1.5 month, on 3rd October 2022, we had got a I had got the same. I can tell this also. The candle which had formed on 28th September 2022, it is also a Morobos, it is also momentum stock. But we don't consider this. Why? Why? Because why we will tell further. So here you can see on 3rd October, a Monobuzu candle had been formed. So it is giving us a confirmation that the bullish signal, now the bearishness may end, the bullishness may come further. It is giving us a signal. And what is the further confirmation? And here we have two confirmation. What is the first confirmation? The support level. And as you can see, this had touched the support level. And it is forming near the support level. This is the first confirmation. And the second confirmation is, and the next candle, okay, just by looking at this 3rd October candle, we can't buy, because it's not giving us a complete information. We will buy, we will wait for the next day. Next day, what happened on 4th October 2022? Gap up had done, and on this daily frame, you can see it had overcame the support level. See, I mean, a breakout happened, and here, and it had gone above the low of the stock. I mean, here also a Morobozu stock had been formed, but the next day it had not gone the above. I mean, it had not gone the above. It still, next day we had got the red candle, and it had not gone the above. So it doesn't give a signal. But here we are getting a signal. It had breakout happened, and a support level, and it had crossed the support level. So it is again giving me a buy signal. So again, okay, at this time I can buy, and my stop loss will be this. My stop loss will be the previous candle close. Previous candle close will be my stop loss, and I had entered. But unfortunately, so every time doesn't work. But unfortunately, again, it had fallen. But again, after I mean, it had taken some kind of retest. After taking the retest, again, it had given me a second chance. And again, after the second chance, again, the next candle, I had waited for the next candle. Okay, the next candle had crossed the previous candle. So again, for the further confirmation, and it had also crossed the support level. And again, for further confirmation, I had waited for the next day. Okay, so for more confirmation, I had waited for the next day. So after this next day, okay, I can take this support level as the previous candle closed, as previously told. By taking this candle as previously told, I had entered into this trade. And as you can see from this, I had gone from 30,000 to 34,000. Almost I had got the 3,500 points. So the purpose of this Morobozu candles is like, when such a candle appears at a resistance level or a potential reversal zone, it can signal a potential continuation of the upward movement. A buy entry can be considered in these scenarios with the stop loss placed below the low of the previous candle. This approach is particularly effective when the candlestick breaks through significant levels like support, resistance, or trend lines, or Fibonacci levels, moving averages, suggesting that the price may continue moving in the same direction. However, it's important to note that only considering these candlesticks, if they so here we need to understand one thing. So we know one thing: trend is our best friend. We can't go against our trend. So it's important to consider only these candlesticks. I mean, we have to consider these candlesticks only if they align with the current market trend. If a single candlestick forms against the trend and without significant support or resistance nearby, it should generally be ignored. We have to observe the candlestick based on the trend, but never expect that the candlestick will change the trend. Like, for example, see here, there is a downward momentum. I'm clearly seeing a downward momentum here. So here you can see, and here you can see a candlestick had been formed. So here, let's take the example of this. On 25th August 2022, a green candle had been formed, and it's I mean, and it's okay. You may see this candle as small, but when you see it, okay, this candle from 32,910 to 33,300, almost 400 points of candle. 400 points is not a smaller, it's a very big thing. But to give importance to this green candle, But we yeah, but do you give importance to this green candle? No. Why won't you give importance to this green candle means it is not aligning with the trend. Here the trend is clearly downwards. When the trend is downwards, even though the green candle forms, unless we get a confirmation like support or resistance levels or moving averages or unless we get a great confirmation, we won't give importance to green candles. At the same time, here you can see there is a complete upward trend. There is a complete upward trend, and you're seeing a great candles in middle of it. And then do you give importance to this? Yeah, and at this time, do you give importance to these red candles? No, we won't give importance to these red candles. Why won't we give to the importance to this red candle means here the trend is completely on upward side. And here for further confirmation, okay, if it is at a key resistance level, if this red candle forms at a key support level or any Fibonacci level, okay, then we may consider. But when the trend is in upward, and even though if any red candle forms in middle of it, we won't give it much importance. So yeah, so that's the thing. So here in momentum stock, we have two things. One is bullish Morbozu candlestick, and the other thing is bearish Morbozu candlestick. So, how does this candlestick helps in our analysis? So that's the thing. So here there are four scenarios. What will happen if the bullish Morobozu forms when the market is up, and what will happen when the bullish Morobozu forms when the market is up and there is a resistance level? And what will happen if the bullish Morobozu forms when the market is down? And what will happen if the bullish Morobozu is formed when the market is down and there is a support level? So see, first of all, we will see, yeah, we will see, this is a Morobozu candle. Okay, although it is a small, you can see there is a high momentum. There is very low wick at the downside, but still there is a high momentum. This is the Morobozu candle. So when the market is up, as you can see here, from here you can see from 14th July, the market had been started going on upward direction. And on 15th July, I had got a Morobozu candle. I clearly can see the Morobozu candle. So when the market is in upward direction on 15th July and on 15th July, on 19th July, and on 12th August, I had clearly see the Morobozu candles. So when the market is in upward direction, Morobozu candles, if Morobozu candles forms, when the market is in upward direction, it indicates confirmation, it indicates further confirmation, it indicates further confidence that okay, if Morobozu candle forms when the market is in upward direction, it indicates confirmation. Okay, it will move more further, it will move more upward, it will give us a confirmation. And the second one is if the Morobozu is formed when the market is up and at the key resistance level, as you can see, 19th July, here it is the resistance level. If the Morobozu candle had been formed at the resistance level, what does it indicate? It indicates a breakout. So if the Morobozu candle forms at the time of resistance level when the market is upward direction and resistance level, it indicates a breakout. As you can see, on 19th July, Morobozu candle had been formed and a breakout had happened. And and if the Morobozu candle form when the market is in downward direction, like you can see on 7th September, when the market is in downward direction, the Morobozu candle had been formed on 7th September. So what does it indicate? We have to leave such candles. We don't need to give importance to such candles. When the market is in downside, and if Morobozu candle forms at the time, we have to neglect it. Like, for example, you can see, uh, yeah, for example, you can see here on 25th February. Again, you can see, you can neglect it. Clearly, you can neglect it. Because why? Here, there are two reasons. Here, the market on 25th February, a very big Morobuzu candle had been formed. See, from 33,200 to 34,100, 900 points. 900 points is not a normal thing. It's very huge. But still, we don't give importance to this Morobuzu candle. Why? The overall trend, when you see the overall trend is in downward direction. And here there are no support level, no resistance. You can see the resistance here, the support is here. There is no resistance, no support. So we will simply ignore this candle, even though it generated 900 points. We will ignore. We can ignore. As we can see the result, even though such a huge candle had been formed, but still the bearishness had been continued. So when the Moroboso candle, when the market is down, so we have to leave it. So when the Moroboso candle forms, when the market is down and there is any support level, and there is any support level, yeah, like for here example, you can take this as support on 4th October. Okay, it had formed near the support level. So if Moroboso bullish Moroboso candle had been formed when the market is down and there is a support level, it indicates a reversal. It indicates a reversal, and you can see here. And again, on 20 March 2023, we had got a Moroboso candle at support level. It indicates a reversal. So let me tell you again, if bullish Morobuzu candle form when the market is up, it indicates confirmation. When the bullish Morobuzu candle forms when the market is up and there is a resistance at the point, it indicates breakout. If the Morobuzu candle, bullish Morobuzu candle forms when the market is down, we have to leave it. And if the bullish Morobuzu candle forms, if the market is down and there is a support level, there is a chance of reversal. So this is all for bullish Morobozu. And at the same time, we also have the bearish Morobozu. And here, if we see the bearish Morobozu, if bearish Morobozu forms when the market is up, when the market is up, if the bearish Morobozu forms, we have to leave it. We don't need to give much importance. Like for here, example, you can take this as Morobozu candle on 2 August, I mean 2nd August 2022. This is a Morobozu candle. And this is approximately some 300 points of candle. But still, we don't need to give importance to this candle because it forms when the market is in upward direction. When the market is in upward direction, if a bearish Morobozu candle forms, we have to leave it. And if and when the market is up and there is a resistance level, and at the time, yeah, and at the time, if a bearish Morobozu candle forms, it indicates a reversal. Like for example, yeah, for example, it is a resistance level, as you can see, 21 April 2022, 22 April 2022. Again here, again on 17th February 2022, yeah, and 11th February 2022. It is a Morobozu candles, and it had formed near the resistance level. When the bearish Morobozu candle forms near the resistance level, it indicates a reversal. When the market is down, if the bearish Morobozu candle forms, it indicates confirmation. Like for example, on 26th April 2022, a candle, I mean bearish Morobozu candle has been formed, and the same at 29th April 2022. But when if bearish Morobozu candle forms when the market is in downward direction, it indicates further confirmation. And when the market is down and there is a support level, when the market is down and there is a support level, at that time, if a bearish Morobozu candle forms, then it indicates a breakout. Like for example, here, Yeah, as you can see here. Yeah, here you can see 20 December 2021. On 20 December 2021, bearish Morobozo candle forms when the market is down, and there is a support level, and it indicates a breakout. Okay, it indicated breakout. Oh yeah, or you can see here. So I mean, if you see from the put perspective, I mean, instead of the call perspective, if you see from the put perspective, you can take this as a support. We can take this as a support, and here the Morobozo candle had been formed, and when the Morobozo candle had been formed, it had indicated a breakout from the put perspective. Again, on 17th February 2022, from the put perspective, again, at the support level, breakout, support level, bearish Morobozo candle have been formed, and it indicates a breakout. So, when a bullish Morobozo candle formed and the market is up, it indicates a confirmation. And when the market is up and there is a resistance, it indicates a breakout. I mean, bullish Morobozo candle indicates a breakout. And when the market is down, if a bullish Morobozo candle forms, it indicates we have to leave it. When the market is down and there is a support level, and at that time, if a bullish Morobozo candle forms, we have to consider it as a reversal. And for bearish Morobozo, when the market is up, we have to leave it. When the market is up and there is a resistance, we have to consider it as a reversal. And when the market is down, we have to take it as confirmation. And when the market is down and there is a support, we have to consider it as breakout. So just like when you see from the put perspective, this is the breakout. I mean, yeah. And then we don't buy or sell just by looking at these candlesticks. We have to add value zones like support or resistance, Fibonacci levels, moving averages for further confirmation. And this is the first type, which we have called out based on momentum. And this second one, see, when market and second one based on wick size, and second one is based on wick size. And when this wick candle will form, when market momentum decreases, candlesticks with similar smaller bodies and longer wicks start to appear. These wicks indicate uncertainty or a potential reversal in the market as buyers and sellers struggle to push the price in one direction. So there are there are four key candlestick patterns to be aware of when analyzing changes in momentum. First one is hammer, second one is hanging man, third one is inverted hammer, fourth one is shooting star. In simple terms, if the wick is big on the downside, see, if the wick is big on the downside and small at the top, irrespective of candle color, either green or red, we take it as bullish. If the wick is big on the top side and small on the bottom, irrespective of color, we take it as bearishness. So just in simply, if in any candle, you can look at, and there are n number of names for this. Okay, I am telling only 4 names, but still there are many names for different types of wick candles. But in the context, you have to remember one thing, like if you see the wick is big on the downside, the wick appears big on the downside, and if the big wick appears very small on the top side, it indicates a bullishness. And at the same time, if the wick appears very big on the top side and it looks very small, I mean somewhat small on the downside, it indicates bearishness. So these can also be called as pin bars. So we call these two, and hammer and hanging man, as bullish pin bars, and this inverted hammer and shooting star as bearish pin bars. So we can also call this as pin bars. So when the price falls, I mean, first we will see about bullish pin bars. When the price falls, and then if this candle forms, here Here you don't need to think about whether the candle is a red color or whether the candle is in a green color. Here color doesn't matter. What matter is the wick is more on the downside or is the wick is more on the top side. If the wick is more on the top side, it is bearish. If the wick is more on the downside, it is bullish. Simple. It can be of any color. So when the price falls, and then if this candle forms, like you can see on 12th May 2022, for example, when the price falls, and then if this candle forms, whether it can be of any color, then it is a hammer. The hammer forms after a decline in price, signaling a potential reversal to the upside. The long lower wick indicates that sellers initially draw the price down. The sellers initially draw the price down, but buyers stepped in and pushed the price back up, showing bullish strength. I mean, as you can see, here there is completely bearish sentiment, completely downward direction. And again, you can see on this day to 12th May 2, it had opened gap down. It had opened gap down and it had fell so much. It had fell approximately from 37,766 to 221, approximately 500 points it had fell. 500, 450 points. But after filling 450 points, the bullish came into power and they had again raised this price to up to 500. So 500 points is not a normal thing. It's very huge. So it indicates, what does it indicates? It indicates, okay, we may see a reversal. It indicates hammer. We call it as hammer. So, and if the candlestick forms, whether it can be red or green, when the price moves upside, like for example, yeah, here on 4th November 2021, if the candlestick forms, it can be of any color, red or green. When the price moves upside, then it's hanging man. So the difference between hammer and hanging man is hammer will form when the when the market is in downward direction. The hanging man will form when the market is in upward direction. And when it will form when the market is in upward, it indicates a bullish signal. So it forms after a price increase, often signaling a potential reversal to the downside. Despite the bullish push that created the upper body, the long lower wick shows that sellers were able to pull the price back down, indicating potential bearishness. Let here, for example, on 4th November 2021, okay, here you can see there is a complete upward momentum. And again, on this day, uh, still you can see I mean, still as you are seeing the, I mean, still on 3rd November 2021, this also is big candle. So this can be also a hanging man. Here you can clearly see, even though the candle forms, I mean, even though you can see the green color, you can see the bullishness, but still here the sellers had tried to take over the control. The sellers had tried to take over the control. But okay, at the end of the day, somehow it ended in positive note. But still, the sellers had came tried to take over the control. Again, on 3rd November, they had tried to take over the control. On 4th November, they had tried to take over the control. And on 5th November, what is this candle? This candle is nothing but inverted hammer. So again, inverted hammer forms, which gives us a further confirmation. So okay, and here you can see the complete bullish momentum. And from 3rd November, it is giving us a signals like, okay, the bullishness may end soon. The sellers may take over the control. It had given us three signals. On 3rd November and 4th November, the hanging man had been formed. And on 5th November, the inverted hammer had been formed, which had given us the signal the sellers are going to take the control. And you can see from 10th November, it had fell from 36,000 to 33,000, approximately 3,000 down. So so here, I mean, you may get a doubt here. So when the hanging man is formed, the I mean, we are getting indication of bearishness. Then how we can call it as bullish? I mean, bullish pin bar, because as you can know, we can earn from the put side too. When this hammer, two hammers have been formed, okay, it may give us a signal, and when we analyze further things. Uh, and when we feel confident, if we buy put on this, I mean, if we buy put, it will give us 3,000 points, and 3,000 points is not a very huge 3,000 points. So still, so again on bearish pin bars, also we had talking about bullish pin bars. In bullish pin bars, we have hammer and hanging man. What hammer forms when the market is in downward direction, and when the hammer forms, it will give us a signal of reversal. It will give us a signal of reversal towards upward, from the downward to upward. It will give us a signal of reversal. And the hanging man, it will form when the market is in upward direction. And when the hanging man forms, it will give us a signal of reversal to the downside. So these are the bullish pin bars. And now we will see about bearish pin bars. If the candlestick forms red or green, if the candlestick forms red or green, it can be of any color. Color doesn't matter. When the price moves upside, then it's shooting star. Okay, yeah, sorry, it's my mistake. Earlier I had told this as inverted hammer. Okay, when the price moves upside, if a candle forms, then it's a shooting star. And if the price, when the, I mean, if a bearish pin bar appears when the price is moving downside, then we call it as inverted hammer. So it's my mistake, small point to note. Earlier, when the price moves upside, if any bullish pin bar appears, what does bullish pin bar means? If there is a more wick on the downside, it is a bullish pin bar. If there is less wick on the upward side and more wick on the downward side, then it is a bullish pin bar. And if there is a more wick on the top side and there is a less wick on the downside, then it is a bearish pin bar. So if the bearish pin bar forms when the market is in upward direction, then we call it as shooting star. So if the candlestick forms, irrespective of any color, when the price moves upside, then it's shooting star. The shooting star indicates a potential reversal to the downside, as the long upper wick shows that buyers, I mean, long upper wick shows that buyers tried to push the price higher, but sellers stepped in and brought the price back down. As you can see, it had opened at this price. It had opened at 36,280, and it had raised till 36,500. But again, the sellers came into force, and it had pushed the price from 36,500 to 36,300. So here, the sellers are slowly taking over the control. So it indicates a reversal. It may indicate a reversal. And when the price is falling, and then if the bearish pin bar forms, yeah, like for example, yeah, as you can see, yeah, it's 12th October 2022. On 12th October 2022, uh, 12th October 2022, when the price falls, and then if any candle forms, if the bearish pin bar candle forms, irrespective of color, it can be of green color, it can be of red color, it is a inverted hammer. It forms after a price decline. I mean, it forms when there is a downward. I mean, when there is a market direction is in downwards. It forms when the market is in downward direction. So when the price falls, it forms after the price decline. often signaling a potential reversal to the upside. The long upper wick shows that the buyers tried to push the price higher, but sellers managed to pull it back down, although the overall sentiment may still shift to bullish. So here you can see, first of all, the stock had been the stock had opened at 29,200, 227, and then it may have fall. I mean, it may have fall till 29,100, and it had raised high to 29,400, but still it had closed at again. I mean, here the fight had been happened between the bullish people and the bearish people, and in the end of the day, the bearish people had won, but still it indicates a reversal. I mean, here you can see there are complete bearishness. You can see these candles. These candles have very high momentum. I mean, there is more body. Whereas here you can see the bullish. I mean, although we had already got the some bullish signal on 11th October, but still on 12th October we are getting further confirmation. Okay, the buyers are slowly trying to take over the control. The buyers are slowly trying to take over the control. So here, so it is an inverted hammer. So when the inverted hammer forms, there is a chance of reversal to the upside. So again, there are and there are bullish pin bars and there are bearish pin bars. And in bullish pin bars, when the price falls, and then if this, I mean, if hammer forms, then it indicates a upward direction. Then it indicates a potential reversal to the upside. And if the and when the market is going on upward direction, and if yeah, and if hanging man forms, then it indicates a reversal to the downside. And if the shooting star forms, when the market is going on upward direction, then it indicates a reversal to the downside. And when the inverted hammer form, when the market is in downward direction, it indicates a reversal to the upside. Of course, we can't rely simply on seeing this. It will give us confirmation. We have to consider other factors also like support level, resistance level. I mean, we have to see further confirmations too. And we have to check the volume sometimes. I mean, as we can know, many times we will get the fake signals. So we have to check the volume too. And last, and then we have, I mean, we have see the based on momentum and based on big size. And third one last we have based on dojis, based on dojis. So dojis is nothing but neutral. Doji means neutral. What neutral means? See, for example, here the share. I mean, the share had started at 100 rupees. I mean, it is a let's assume that this is a daily time frame. Daily time frame. In this daily time frame, the candle had opened at 100 rupees. I mean, $100. The candle had opened at $100, and it had reached to the high of $150 on the day. And again, from $150, it had fell to $70. And after falling to $70, and again it had raised up, and again it had closed at $100. So here you can see there is a fight between bullish people and bearish people, but at the end of the day, no one wins. Neither bullish wins nor bearish wins. It had become a neutral. The same here. The again here you can assume the stock had opened at $50, and from $50 it had raised to $80. But after raising to $80, it again fell to $50. So here no one wins. So from the point where it opened, the same point it had been closed. So these are like neutral candlesticks. So neutral candlesticks are formed when the price is pushed both upward and downward during the trading period, but ultimately closes near its opening price. So here we have four types of candle. So this we can call it as neutral candle or doji candle. We call it as long-legged doji, and we call it as gravestone doji, and we call it as dragonfly doji. So this neutral candle will form when the open and close prices are virtually the same, resulting in a very small body with wicks extending above and below the body. This pattern indicates that neither buyers nor sellers were able to gain control, leading to a neutral. The doji is often a signal uh, sign of neutrality. Like, for example, here you can see this is a doji on 30 June 2022. This is a doji. You can see it had moved to the upward direction, it had moved to the downward direction, but still it had came in the middle. I mean, you can see, you can find many doji candles. So again, see, on 18th April 2022, again, here also we don't consider whether the candle is in green color, whether the candle is in red color. Here the color doesn't matter. Here what matter is psychology. What matter is concept. What is the concept? At the time where it opens, at the same point it will close. So here you can see it can be of any color. It is a doji. It is a neutral doji. So we don't give importance to such candles. So here, no one wins. It's like a neutral candle. So then we have long-legged doji. Long-legged doji. Long-legged doji is nothing but it is neutral. I mean, it is somewhat big size. I mean, it is in somewhat big size. Neutral is in somewhat uh, smaller in size. So long leg doji. This doji has long wicks on both sides, showing that prices moved significantly in both directions, but closed nearly at open. For example, see this is the long leg doji on 3rd February 2023. 3rd February 2023, long-legged doji had been formed. As you can see, the wicks have been very big. I mean, okay, here you can see in image, you can see, okay, it is, I mean, in image, you can see, okay, it is perfect 90 degrees, it is perfect calculative, but in reality, there is somewhat difference. You can't expect like, okay, what you, it have to be perfect. So of course, here the intention is like there had been very long wicks, and at the point where it had opened and it had closed at the same point. So it is a long-legged doji and gravestone doji. And this gravestone, the meaning itself tells gravestone. Gravestone. I mean, gravestone happen when someone dies. Then this word will be used, right? So this gravestone doji, this occurs when the price opens at the low, rises significantly, but then falls back to close near the open, forming a long upper wick with no lower wick. Like yeah, like you can consider this. I mean, you can consider okay, 12th July. Mm, so yeah, of course. I mean, yeah, I mean, this type of candies will form very rare, but still, I mean, if you understand the concept, it's okay. See, gravestone doji here on 22 November 2021, gravestone doji had been formed. So here you can see gravestone doji. So this occurs when the price opens at the low, rises significantly, but in both the rises significantly, but then falls back to close near the open, forming a long upper wick with no lower wick. And the inverse of this gravestone is dragonfly. In dragonfly, what happened? This is the opposite of gravestone doji. when the price opens at the high, falls significantly, uh, but then recovers to close near the open, forming a long lower wick with no upper wick. So here, when this doji candle forms, it's better to keep our decision pending. So when the doji candle forms, if you are taking any decision, if you are thinking to enter into trade when this doji candle forms, it's very high risky, very risky, because we don't know what happens afterwards. So if the so for this, when the doji candle forms, it's better to keep our decision pending. So if the doji breaks and forms a strong candle upside or a strong candle downside, it is better to take an entry. Like for example, first we have to see which side the doji candle high or low breaks first. I mean, on that side, if we enter into trade, then it will be a big deal. Like for example, here it is a doji candle, and is a doji candle, the upward, the high of this candle had been broken. Then this here I have got the confirmation, and so if I enter into this trade at 16th March, you can see I had got approximately from 600 to 800 points. Yeah, approximately 33,600 to 34,000, approximately 1,000 points I had got. So here we have to see if any doji candle forms, we have to see whether it breaks it high first, whether its break is low first. If it breaks its high first, then we will get a signal of bullish momentum. And if it breaks its low, then we get a signal of bearish momentum. So when the doji candle forms, it's uh, if a strong candle upside or a strong candle downside, it is better to take an entry at that time. We have to wait for a subsequent strong candlestick that breaks above or below the high or low of the doji to confirm the direction of the next move. This type of candle forms mostly at support, resistance, or consolidating places. We can't see them in a directional move. When the stock is in a complete direction, we will see only momentum related stocks. We can't see this type of doji stocks. We will see doji stocks when the market is in sideways or when the market is a consolidating point. So it will form when the price is in question mark zone. And to determine if a candlestick pattern is genuine, and it is to note that there are many times, many candlesticks, there will be a fake candlesticks. It will give us a fake moments. It will not give a genuine moments. For that, we need to check the volume. So if any candlestick forms, if any Moribund candle forms, or if any doji candle forms, or any type of candlestick forms, we have to check the volume. Is the volume, we have to take confirmation with other indicators, so like volume, support, resistance, moving averages, then only we have to take our decision. By just trusting this candlestick, by just simply trusting this candlestick, we can't take any, it's not advisable to take buy or sell decision. So market condition or complex, and we have to see, like here, for example, here here a Moribund candle forms. But after Moribund candle, here, here a Moribund candle forms. After Moribund candle, you can see a dragonfly stock forms. After dragonfly, here the different kind of candle, like it is a dragonfly, it is a gravestone. You can consider it as a gravestone, and you can consider it as a wick, and you can consider it as a other candle. Like here, you have to analyze. So we have to take the momentum. Like market is complex, and market will run every day. If you keep this in 15 minutes time frame, if we keep this in other time frames, you will get, like for example, I will show you. Like here, you can see. It is a 15-minute time frame. See, 15-minute time frame. When you combine 15 minutes 4 times, it will make a 1 hour time frame. So here you can see, here one candlestick has been formed. Here the other candlestick has been formed. Here the other candlestick has been formed. here the adult candlestick have been formed. So when it is on 15 minutes time frame. But when you combine this in 1 hour time frame, you can see a simple one candle. And this candle indicates, and this candle is based on big size. I mean, you can see it's not a momentum related candle. It's not a doji related candle. It is a big related candle. So here you can see. So it basically it says that there is not much upward momentum. Okay, I mean it's not giving us a more upward direction. Like as you can see, it's like a uh, yeah. I mean it's not giving us. I mean the intention is like when we are checking in the candlestick, we have to. It's better to check with the higher time frames, like for a week, for a month, for a day. I mean, it's better to check for a week because, for example, see, let's say if stock opens at this date, see, if the stock opens at this date, I mean Monday. Okay, see, let's say this is a Monday. Yeah, let's say this is a Monday. This stock opens at here. Here, let's assume here. So it had, I mean, again, here some candle had been formed, and here the high of this candle had been breaken. So it given us a buy signal. Some traders may get them, and they may buy here. So, but you can see at the end of the result, what happened from the point where it started at the beginning of the week, that is on Monday. It had ended at the same. I mean, it had ended at the same point on the I mean, at the end of the week, that is Friday. So when you see at the daily chart frame, it is giving me so much confusion. So it is giving somewhat fake signals. But when you look this at the same, when you look this at the same weekly chart, so what will it give? It will give me simply a doji candle. I mean, the it will give me simply a doji candle. That's it. That's it, right? So what had happened at the end of the day? At Monday, it had opened at this point, and at Friday, it had closed at the same point. So okay, Tuesday, Wednesday, Thursday, I had seen the upward momentum, downward momentum. So again, when I check this in the daily time frame, I'm getting very fake signals and getting confusion. And as a beginner, I'm getting a confusion. But when I check the same in weekly time frame, I'm what I'm getting a doji. Why I'm getting a doji? It had started at the same point and it had ended at the same point. So it's a very great signal because see, market have to move consistently. It will not stop in one place for many days. It is a standard point. So market will stop not stop it at one point for many times. So here, when I see the market had been stopped at one place only, at one point only for many days, then on next week I will see at which and which direction the candlestick had been breaking. So here on next week, the candlestick had been breaking on the downside direction. So I can simply, I mean, there is very high chance if I enter at this day by confirming, as you can see, the market had moved downwards because it is a trend like the market won't stay at one place for many days. So, for better understanding, we need to look at candlesticks with higher time frames. If we look at candlesticks with lower time frames, we will get more confusion. So again, as you can see, 1 hour to one day. See, as you can see, in 1 hour, you can see the open had been open at this point, the close had been done. As you can see, it's very confusing. But when you see it one day, as you can see, okay, it gives, I mean, it give me more clarity and it avoid me confusion. Again, if you see the 1 minute, 1 minute to 15 minutes, you can see there is so much of confusion. But when you see the 15 minute, okay, it gives me clarity. Yeah, so till now, we have tried to focus on single candlestick patterns. We have just focused on single candlestick patterns, and on the in the upcoming sessions, we will explore more on double and triple candlestick patterns. Yeah, I mean that's the end of this session. If anyone have any doubts, please.